So my name is Don Vivrette. Welcome to week 7 of It's Your Estate. We're going to talk about executors and trustees and things like that, and the fact that you're going to be so caring about your family members that you're going to let them be executors or trustees on your trust. And Pete's going to tell you what they get to deal with, along with Richard in a little bit. So as we have done before, if you have questions, if you move your mouse, the Q&A button will light up. If you use that, I can respond to you, or we'll ask the question generally if it fits in there. And that is the best way to respond, ask questions. If you use chat, we'll get to it when we can, because that's a lot harder to deal with. And so I would much prefer that you do the Q&A, but it's certainly your call in terms of where you want to go. So Pete, would you like to talk about where we've been?
Yeah, but I was thinking of the way we go to the
Mike,
materials page.
I'm sorry, we're doing Mike first. I apologize. I forgot, I'm new to this. It's only the 7th week. I'm going to disappear and you guys can talk.
Okay. Hello, Mike. How are you doing this morning?
Hi, Pete. Good to see you.
Good to see you. Mike, you're with United Way, and tell us, because United Way has been around for how many years?
The Orange County chapter has been around since 1924. So we're going on 100.
Wow, that's a long time. Today, the United Way is not the old United Way. And tell us a little bit about what's going on with United Way in Orange County, because you're doing some really exciting stuff that's absolutely needed here in the community.
Yeah, thank you. I got a couple slides. I'm gonna pull that up. So hopefully you guys can see that. And yeah, so I guess first I wanted to mention just my background here. And we actually, so United Way traditionally does workplace giving campaigns. That's kind of what we're known for. And we're actually in the throes of our United Way workplace giving campaign. So as a donor to that campaign, I get this cool background that says that I donated. So that's what's going on back here. And we have home team as our kind of slogan. So we are the home team. So we took on this sports theme this year anyway. But yeah, so United Way, what do we do? That is kind of the $64,000 question. Everybody knows who we are, but what exactly do we do organizationally? And there's about 1,800 of us across the country, across the world, actually, and each one is its own separate 501c3. And so Orange County, I'm with the Orange County chapter, so everything we're focused on stays in Orange County, and we have 3 main pillars of support: homelessness.
So Mike, let me interrupt you. So if somebody wants to donate to United Way, they should put United Way Orange County to make sure. Yes. Okay.
Yep, and we have our own website, and I'm going to give a link to that, and I'll put some stuff in the chat so people can get to us quickly and easily. But yeah, basically homelessness, financial security, and student success are the 3 main things we're working on. So helping those people that are in the, in a tough spot or in this kind of at-risk category, helping them kind of take a step forward.
You know, besides the fact that you're helping out the homeless, which I think is wonderful, but what people don't realize, I think, that you're helping out landlords.
Yes.
And explain that, because I think it's really mind-boggling that what United Way is doing, and statistics are just absolutely amazing.
Yeah. So there's a program that Pete's referring to called Welcome Home OC. And so with the pandemic, there's, homelessness is even, it's a bigger and bigger issue year after year. And so one of the innovative things that United Way is helping to spearhead is finding housing. So Orange County is a really expensive place to rent or buy, as we all know. And so that's one of the big struggles for our at-risk families is finding that place to actually reside. And so we partnered with the housing authorities in Orange County, and we actually, one of our biggest initiatives is to go out and find landlords, and we incentivize them to rent to this at-risk population. And traditionally you think of that as a population that's maybe not the best group
Yeah.
of people to want to actually rent your
Pop-
property.
Yeah, possibly delinquent rents and that type of thing.
Yeah, and so we kind of we're standing alongside the tenant, and then also standing alongside the landlord to provide additional financial support for the landlord to kind of ensure that this a tenant pays the rent and also has the wraparound services that a homeless or at-risk person needs with mental health, financial wellness, childcare, all these things that go along with helping a person kind of rise up and get back on their feet.
Yeah. So if you are a landlord out there,
Yeah,
talk to United Way, because there has not been one delinquency as far as in the program that United Way is conducting.
yeah. So we're actually a much lower risk tenant situation than just the general population of renter. So
Yeah.
I'm going to put my information at the end. Feel free to reach out to me.
And pass the
specifically-
word
Yeah.
around to other individuals, that because it's a kind of an oxymoron that you think helping out the homeless is that you're sacrificing somehow possibility on rent, on getting a good tenant, and it's exactly the opposite.
Yes, we are actually, yeah, we are a better bet, you might
Yes,
say.
I like that. I like that.
So it's a win, and it's a win-win. So you're doing a great thing for the community. You're also helping your own personal interests. So
Yeah.
everybody wins. I did want to just share. So we have student success and financial security. The financial security portion is somewhat similar to what you guys are already teaching, as far as savings accounts and where to invest and tax rebates, making sure you're maximizing your tax refund. So OC-free tax prep is a big program we do. And then the one thing I want to leave with is this mentoring component as far as the student support. So we get into the high-risk student population in a lot of the high schools around Orange County and help people figure out what's next post-high school. Is it college? Is it jobs? If it's jobs, what are the resume skills they need to be building? And one of the ways we do that is through what we call our e-mentorship program. And so we pair business professionals, individuals, adults to students that are high school seniors. And the goal is to kind of be their support mechanism as they graduate their senior year. They've got a lot of questions. They're 17, 18 years old, trying to figure out life and how they're going to move forward. And so we pair an adult with them, have monthly kind of check-ins, monthly workshops, with the goal of them graduating and then having the baseline information and technology. So we provide them a laptop at their graduation to push them off and lift them into their next area. So it's a pretty short volunteer commitment for that, over 6 months, and we're in need of those folks. So I'm going to leave you guys with that. My email here is on the slide. I'm going to put it in the chat, so hopefully that's easier for you guys to just copy and paste. But yeah, I'd love to hear from you, and thanks for having me, Pete.
Yeah, one of the things too is that for sometimes we run into individuals that say, "Hey, I'd like to do a charitable remainder trust, but I don't have a particular charity in mind." How many charities is United Way involved in?
Hundreds. Yeah.
100 charities just in Orange County.
Yeah.
So
Yep, so
if somebody is not sure as to what charity is their favorite, they can give you a call and you can help them out picking out a charity or picking out a mission as to what they may want to do.
Yep. We fund a lot of organizations. We also have our own programs ourselves. And we're very well integrated in the community, and we can definitely be a resource to that end.
Yeah. Thank you, Mike. Love having you on the program. I really appreciate your sponsorship, and hopefully your contact information is on the screen, and hopefully you'll get some calls. Thanks again.
I appreciate it, Pete. Thanks for having me.
Talk to you later, Mike. Bye-bye.
Okay. Bye.
And let's see how we're going to go now to,
So the question, Pete, is what we did not do was normally you do a review, we talk
Yes.
about the materials, and then you go on. So
yes, we're going to do the materials right now.
why don't we do the materials right now?
Richard, why don't you go ahead and pop yourself up on the screen? And everybody, if you go to our website, then go to workshops, click on materials, go to It's Your Estate, and then scroll down to week 7. And week 7, there's duties of a trustee and executor. That's the session that we're going to be doing today.
So that's the
And-
handout material that goes with what we're presenting today.
Yeah, go all the way down.
And I'm
further
going to
down.
enlarge this so that it's easier for Pete to read it as we, oops, I'm sorry, smaller, larger. So then if we go all the way to the bottom of it,
Yeah, we got checklist, things to do when a person dies. It's just an awesome sheet that gives you just a real checklist as to what a trustee or executor will be doing. A guide to managing someone else's money, because that's what you're doing as a trustee. We have a kind of an organizer there as well. A lot of times we get questions as who do you choose as a proper fiduciary? There's a good article on that. People don't understand statutory duties, and we're going to go through them today. And there's also an abbreviated one right on the articles. Selecting a trustee, an article on factors to consider. Sometimes we have to have a trustee for a long period of time, and we have to invest, and diversification is one of the keys there. Sometimes there are problems, and we really encourage mediation. So mediation is one of the keys to stay away from the court system. So let's go back to Richard. And Richard, why don't you pull up your ask first?
All righty.
and I'm going away. I'll be
Goodbye.
back. I'll
You
be
want to
back.
go ahead and clear Mike from the screen? Don, there you go. All right.
All right. Are we seeing it?
Yep.
Okay.
Okay, you got a bachelor's degree from Cal State University at Fullerton.
That is correct. Yeah.
And
Business
you-
degree in
and
finance.
And you're a certified financial planner.
That is correct.
You got that designation. And how many years have you been a professional fiduciary?
Since 2007. So about 14 years now.
God, time flies.
Yeah, it sure does.
Just for full disclosure is that Richard is a professional fiduciary with us, with a group called Professional Fiduciary Services. You have a credential. It's more of a credential for the CFP. It's more of a license for being an executor. So you can go to the Department of Consumer Affairs. I think the website is the Professional Fiduciary Bureau, and you can look up Richard's license number, and his number is 310, which means that there are over 1,000 today professional fiduciaries, and you're one of the early licensees.
Yep. Yeah.
Yeah.
Back in 2009.
Yeah.
Yeah,
So your
started.
business is fiduciaries. How are you paid?
I am paid by the client, and it's usually a percentage of assets. My rate is 1% on the first 5 million of estate assets, and then it starts to scale down after that.
Okay. And then you're not, scroll down just a little bit.
All right.
You're not affiliated with anyone that sells annuities, mutual funds, or other financial products.
Nope, absolutely
And,
not.
and you certify that the above is true and correct.
Yes.
Okay,
Yeah.
let's go to, by the way, and Richard is a nice guy, besides being a qualified professional. So let's go to your presentation.
Alrighty, let's see here. Share screen. Let's see if I could. Oh, wait. 1 second here.
So my Ask First forum is in session 1. If anyone wants to take a look at it, it's there. I'm also a professional fiduciary and have been one for around 30 years. So let's go.
All right,
So
are we
your
seeing
license number is 3?
it?
No,
Sorry.
thank you, Don,
Are we
for
seeing
that.
the slides?
Yes.
Okay.
Yeah.
Okay.
Probate code sections for the successor trustees. By the way, being an executor or being a trustee, the process is very similar. The only difference is that being a trustee, you're not in the court system, although you can be, but we don't want to be. So let's go through what is a California licensed professional fiduciary. Richard.
All right. Well, as Pete mentioned earlier, there is the Professional Fiduciary Bureau, which is really nice. So all of the professional licensed fiduciaries have to renew annually their license with the Bureau. And that's going to include 30 hours of continuing education credits. Each fiduciary is going to have a background check and fingerprinted, 2 tests that are taken, and you need a referral from 3 other professionals. So the nice thing about this also is that it gives the clients and family members an avenue to complain and
Yes.
And raise concerns if there's any concerns that they might have.
And-
The Bureau then will contact the fiduciary and get some kind of explanation.
Yeah, and they have investigators and they will investigate. This is really important because we have a movie out that basically slams kind of a professional fiduciary. You have the whole Britney Spears fiasco. And by the way, the Britney Spears fiasco, there's not one professional fiduciary involved. It's all attorneys involved. So attorneys can be fiduciaries. They can be your successor trustee. They just can't charge both legal services and they can't charge fiduciary charges. They can only charge one fee. CPAs sometimes are fiduciaries. Corporations, trust companies are sometimes fiduciaries. In our presentation today, we're going to assume that most of you are going to name a family member as the fiduciary. And the reason, Richard, why do they call us professional fiduciaries?
We are non-family members is a big thing. Yeah, and it's what we do every day. We are, successor trustees, and that's our vocation.
Yeah, but the fiduciary means that you have to serve in the best interest of the client or the estate or the beneficiary. And so when we serve as an executor in somebody's will, we serve in a fiduciary capacity. When we serve as an attorney in fact for the durable power of attorney, we're serving in a fiduciary capacity. When we serve as the medical agent under the Advanced Healthcare Directive, we are serving in a fiduciary capacity. When we serve as a successor trustee, we serve in a fiduciary capacity. And so therefore the name for what we do as a profession are called professional fiduciary.
When is it that someone needs to hire a professional fiduciary as opposed to having a family member or helping somebody else out?
I didn't understand the question, Don.
When do I need to say I want a professional fiduciary as opposed to using my children or my spouse or whoever else? Why do I have to have a professional other than you're going to do a more professional job and you know what you're doing and you deal with it every day?
Yeah, is
there a legal requirement?
No.
Okay.
You can name an attorney, you can name a CPA, you can name a financial advisor, you can name a friend, or you can name a professional fiduciary. And what we're going to go through today, thank you for the question, by the way, Don. And what we're going through today is, what are those standards? Because no matter whether you're a professional, a lay person, or an attorney, you're subject to the same standards. So, and that's why it's important to kind of go through this session so that if you name a family member or a friend, by the way, I would never name a friend. You don't want to do this to them. But we all have to follow these rules. They're called the probate code. And let's go through the next slide, Richard.
All right.
What do we do?
Yeah, so we've got a lot of administrative tasks to do. We're going to be managing assets, both financial and real property. We got to maintain good financial records. That's very important. And then also communicate with the beneficiaries. And so we got to put all the beneficiaries on an equal playing field and let them know what's going on before if you're making any moves or selling any properties. We're going to be coordinating tax preparation, not only for the person but also for the trust. And then sometimes we're going to be managing real property as well. We might have rental properties and we're going to need a property manager and be collecting rents. And then buy and sell, or usually selling real property. And then the funeral arrangements is in coordination with your advanced healthcare directive. You're going to have some funeral arrangements and your agent there, but also as the successor trustee, you're going to be paying for it. And then also you're going to be overseeing the care management plan, and hopefully you've had that talk with your client beforehand. What are we going to do when you're incapacitated?
Yeah. So the trustee kind of acts like a CEO. In other words, we don't make sure you're buried. We don't make sure that we're not the real estate agent for the sale of your house. We hire CPAs, we hire attorneys, we hire contractors, real estate agents. So we're kind of a jack of all trades with a master of none, trying to coordinate so that we can pass on the assets to your beneficiaries. And that's kind of where, if you name a family member, that's what they kind of have to do. They're just a temporary manager to make sure that it gets to the next owner. And so let's go through the next slide.
Ready? We have benefits of a professional fiduciary. So obviously we're a little biased on this because we think we do a good job. But we are a neutral third party, and sometimes that's important. We could help maybe keep the family together and have everyone pointing their fingers at us or looking to us for answers. And we're not emotionally attached. We don't have any family history, so we're just in there doing our job.
We find that a lot of the problems come from someone not liking each other while they were growing up, and
yes.
So there's that when they become trustee, they're now in charge, and they use that position to take advantage of the situation with the rest of the family.
Yeah, we see that a lot. And it's another nice thing too is that because we do this every day, we have a wide breadth of professionals that are in our circle that we deal with all the time to handle all the administrative tasks, to the financial advising, the property management. We have care managers that we work with. So that helps facilitate an easier administration.
Yeah, one of the things that we do in this area we don't have to use the legal attorney as much. We don't have to use the CPA as much. So we can save monies for the estate because of our experience, essentially.
Yeah, no, you're absolutely right. I flash back when I first got started. I had every question I could think of. I'd be asking the attorney, and it would take a lot of their time
And money.
Yeah, exactly. And the beneficiaries are going to get 100% of the benefit with none of the liability. As fiduciaries, we take on an immense amount of liability. And so the beneficiaries can kind of sit back and wait for their money. The knowledge of the probate codes is another issue that you just learn with experience. The more you do this, the more you understand the different probate codes and your duties. We will serve in incapacity, fiduciary positions, the power of attorney, of finance, and also the advanced healthcare directive. I think you do the same, Pete. If I'm in the role of successor trustee, I serve in those other roles as POA and advanced healthcare directive free of charge. It's just under the umbrella of my successor trustee fees. And yeah, sometimes the family members fight. Everyone thinks their kids are angels, but we see, we kind of see a different mentality when it comes to inheritance. It's kind of like winning the lottery sometimes for the kids.
Yep. Let's go to fiduciary positions in the estate plan. We were talking about this because you're going to be naming a lot of people. So
yeah, absolutely. You want to put some thought into who your agent's going to be, right? How old are they? You don't really want your bridge partner on some of these positions because you guys will be aging together. You're looking for, someone younger. Sometimes location is a good thing, not necessary, but it's going to take thought to decide who that person's going to be. And you're going to want some backups for each one of them. You want to pick 2 or 3. And the whole idea is that by doing this pre-planning, you're avoiding conservatorship, and conservatorship is grossly costly. I'd say it's at least, probably $20,000 for the first year. You got
that's if it's uncontested.
Yeah, which it would be. You might have a family member say, mom's not incapacitated, and we shouldn't be in this situation. Pete, what do you suggest for agents when you're looking for agents? What kind of qualities?
Well, I look for, one, have you talked to them? Do they understand what they're going to be doing? And we have that checklist that's really handy. So sit down with someone that you think would be a good person to do this, and sit down with them and ask them, do they have the time? Do they have the willingness to do it? Are they somewhat anal? You have to keep good records. Everybody wants to know every penny that comes in and every penny that goes out. Do they understand that it's not their own money that they're dealing with? They're dealing with someone else's money, even if they're the trustee and the beneficiary. And we're going to talk a little bit more about that. So, that's a big issue.
And also, I think noting on your advanced healthcare directive, also that's in a different arena. You're talking about the medical arena with that agent, and they need to advocate for you. And so you got to have those discussions with your agent about a dignified death and how you want that to be handled, and probably a strong enough person to talk the language of the medical community as well to advocate for you.
Yeah, let's go to the next slide.
All righty. Okay, so trustee status. So the important thing here is you got to do this while you're alive and kicking, and but you're competent. You're having the discussion with your agents and the people that you're planning on choosing, because as time goes on, you're going to be restricted things you can do. So you can see here in the grantor column, that is you. That's the owner of the assets. You are the grantor, the settlor, the trustor. You're also the beneficiary of the trust as well. So you're going to receive either income or principal from the trust to pay for expenses. And you're also the trustee. is your third role as the administrator of the trust. You're the money guy. And as soon as you reach incapacity, that last role of the money guy is gone. You need someone else to step in for you to administer the money.
Well,
and
it's
then
not
obviously-
just, people think that it's all about the money, and it's not. The money part is the easiest, I think,
Yeah.
because the money doesn't have any moods. It doesn't, it doesn't have to have breakfast at 9 o'clock. It's about taking care of people. And so if you become incapacitated, it takes money to take care of people, but it's about taking care of people. And so you want that person in place and local and competent and understanding so that they can take care of you. And that's the important part. Once you're dead, everything kind of works out. And it's, from my point of view, it might take a little longer, but it gets handled.
And it is important while you're incapacitated to have those goals spoken with your agent, because there's various places for living arrangements, assisted living and even residential assisted living have a lot of different variances and how the quality is, how the food is, how the care is. And your agent needs to be scouting that out for you and picking out a nice place because you don't want to be in a rotten place.
You don't know. But what people don't understand is that sometimes it's not how the outdoors look or the interior looks. When you are looking at a board and care, you don't want an institutional setting. You want the employees that have been there for 10 plus years. You want a family setting. You get this image out of your mind of a nursing home. Those are awful. There's over 6,000 licensed board and cares here in Orange County. And sometimes home absolutely is the best, but other times home is not the best because you're isolated. So these are the kinds of decisions your fiduciary is going to be making for you, depending on your situation.
Yeah, and it's important. You want, like Pete saying, that atmosphere should be a caring, loving, atmosphere at these boarding cares with a fantastic house mother and a good cook. Everyone complains about the food.
Yeah, you want good cooking.
Yeah.
Let's go to Dave. This is the first general overall fiduciary duty. Talk a little bit about this, Richard.
Sure, absolutely. So the general duty is to report information to beneficiaries. The statute requires trustees to keep beneficiaries informed with respect to matters involving the trust. This is very important. It's easy to have 4 siblings and you just kind of gravitate towards 2 of them. They present better, they speak better, and then the 2 other ones could have issues of gambling issues or whatever, and that it's hard to communicate with them. And so you can't be biased. You have to be non-biased. You got to keep everyone informed.
Transparency is probably a good word.
Yeah.
This is no secrets, because if somebody is not reporting or communicating, the other person is not going to think the best is happening.
Yeah,
people think the worst.
Yeah, exactly. You get that pillow talk going on. Each one of the siblings might have a spouse and they're talking about each other. And so, the best practice is that transparency. Keep everyone informed. Try not to let anyone communicate with you on their own. Just bring everyone together and say, here's what's going on.
Yeah. Let's go to the next slide.
All right. Let's see. We got duty to administer trust. Another probate code requires a trustee to administer a trust according to law and in accordance with the trust instrument. No matter how good the trustee's intentions, the trustee is not free to administer the trust in some other manner.
Oh,
So it really speaks to the importance of the trust document, that language that you're putting in there in the document. The settlor and the becomes the, kind of the marionette pulling the strings, even after death, of
Yeah.
how things are going to be administered.
my brother-in-law's mother just recently died, and the trustee was the son and a daughter.
Okay.
And I asked because they're the successor trustees, I asked them both, have they read the trust? And she goes, no, mom told me what to do. I go,
Mhm.
I'm sorry. The trust is the Bible. That's the primary, that's the document you have to look to give you instructions. Or I'm sure you've had this, Richard, as well. Mom always gives us $10,000 at Christmas time.
Mhm.
And are you going to give us the $10,000? And what would you say?
Well, I would say no.
And why would you say no?
Because that is something that mom was doing while she was alive, and that's fine. But now my goal is to conserve the trust, and it's not mentioned in the trust that you're getting
Exactly.
$10,000.
Yeah. Or the trust says there's a loan out there. Well, if you loan money to one of the kids and you have other kids, what are they going to say? That loan needs to be repaid.
Yeah, that could be a sticky one.
So,
Yeah.
and the other person who received the loan is going to say, hey, mom meant that the loan was forgiven. And so that trust document is the Bible. The trustee has to follow what is stated in the trust. If they don't, they end up in court.
Yeah, that could be quite expensive.
Yeah. Let's
Richard?
go to the next.
No, Richard, hang on a second.
Yes.
Is the probate code that you're going through California specific? If I was in Arizona or if I was in Missouri, is the probate code the same? Is this a national standard or California?
That's a good question, Don. It is only specific to California. Each state has their own probate codes. So today's presentation is just California. If you're in another state, you're going to want to talk to an estate planning attorney and find out the local codes in that state.
But
if I'm thinking generally, are they probably similar?
yes,
Absolutely. Yeah, I would think that they've adopted duties to care, and all the duties of a trustee, I think, are probably similar. It's probably,
and the fiduciary liability is the same.
Yeah.
Okay.
Yeah.
Thank you.
Yeah. All right. Next slide. All right. Duty of loyalty. That's a big one here.
Yeah.
This statute states that the trustee has the duty to administer the trust in the interest of all beneficiaries. The trustee cannot use the trust for his or her own benefit. This kind of takes us back to that idea of the pillow talk. You've got, 4 siblings, and each of them are married with spouses, and you name one of the children as the successor trustee, and everyone's wondering where he got that new RV from all of a sudden. So you have an overwhelming duty that you're loyal to everyone, and
Not to
everyone knows
yourself.
what's going on.
Yeah, I had a situation recently where there was a brand new Mercedes in the garage.
Yeah.
And the trustee wanted to buy that Mercedes,
Mm-hmm.
or for as low a price as possible from the estate.
Yeah. Everyone. Yeah. You can't do any kind of handshake deals. It has to be fair and open. Everything has to be market value.
So the beneficiary who wanted the car owes a duty of loyalty to the other beneficiaries first. So he had to offer that car for the price that he wanted to pay for it to all the other beneficiaries first. And only upon their declination and their approval could he buy that car for that price from the estate. Else he would be breaching his duty of loyalty to the beneficiaries.
Yeah, yeah, that was a very good solution. And kind of goes back to that transparency as well. You know, you're not.
Or if you have a business,
Mhm.
you know, and the trustee, you name one of your kids as to run the business. The business can't benefit the trustee. The business has to benefit the beneficiaries. It's a duty of loyalty. And you'll see breaches of fiduciary duties, and they'll say breach of loyalty, and then they'll give an example as to what the trustee did. And remember, once you're accused of breaching the duty of loyalty, then it's up to the fiduciary to have to prove that they did not. Whereas ordinary liability would be, hey, you have to prove that I breached.
Yeah.
It's not the same way under the fiduciary duty rules. Let's go to the next slide.
All righty. We got duty to deal impartially. This statute states if a trust has two or more beneficiaries, the trustee has a duty to deal impartially with them. A trustee cannot favor one beneficiary over another. This is particularly critical when the trustee is also one of the beneficiaries. In such case, it is a clear violation of the law to favor himself over herself over other beneficiaries.
We see this. We see this all the time. Where the previous trustee had a friend who was a real estate agent, and they give the listing of the house to that particular individual, and they get a little kickback on the other hand. You can't do that.
No. And it's almost, it has a lot of this conflict built into it too. That's a real tough role for the child to be the trustee. They've got to be so impartial that it's, you know, there's no favoritism to anybody.
Yeah, and he has to put the other people's interests first and not his own if you're the trustee. So, you know, it's you have to be completely impartial because it's not your money. And that's the other thing too, is that sometimes when lay people become trustees, they think it's their money to distribute. And it's not. You're dealing with someone else's money. It's not, you don't have title to it. You're just a trustee hat on.
Yeah, you're the money manager.
Let's go to the next slide.
Next slide, we have duty to avoid conflict of interest. This statute requires that a trustee avoid conflict of interest. This prohibits a trustee from entering into transactions with the trust property, which will result in a profit for the trustee. For example, loaning personal funds to a trust. This action results in a trustee having a conflict between his duties and to the trust and duties to himself and herself. You know, I think of this as just even having the family member in there, you've got an uphill battle to show everyone that there is no conflict of interest.
Can you imagine the trustee and the one that's also received the loan? Yeah,
exactly. You have an immense amount of leverage when you're the trustee, and you've got a lot of powers. And you know, it's easy to see someone loaning money and making interest off of it.
The temptation is there. It's kind of like having a cake in front of you and saying, no, you've got to give the cake to the beneficiaries first, and you only can have the leftovers if the beneficiaries give you permission.
Yeah.
You know, because if you take the cake first, that's a conflict. Right. And it goes to cars, it goes to jewelry, it goes to personal property. When you're the trustee, you cannot take the interest from the other beneficiaries. You're the neutral third person. And whether it's a family member or not, or an attorney or a CPA, you cannot benefit from that trust.
No, no, absolutely not. And that goes back to record keeping too. And I think we're going to talk about that as well. But you've got to show everything. You're showing every move you're making, every dollar in and dollar out. And I think being part of that uphill battle is you got to over exaggerate that to show that there is no conflict.
Well,
of
everybody
interest.
assumes that something else is going on, and
Yeah.
we're going to talk a little bit more about that as we get on with some of the other probate codes. Let's go to the next one.
Alrighty. Duty to take control and preserve property. This statute requires trustees to take affirmative action to take and control a trust property and preserve that property.
So what does that mean in practical terms?
In practical terms, client passes away. I'm at the house within that day, and I'm changing the locks on the house right away.
Why are you changing the locks?
Because I don't know who has a key. A neighbor could have a key. One of the childs could have a key, and I have situations where stuff could go missing. And I have no idea why or where or who took it. So I need to secure the house and everything that's in it.
Give another example.
Bank accounts. You don't know if there's joint accounts or if there's a relationship with one of the children on any of the accounts. You need to find out where those accounts are and get control of those. Not only preserving the house right away, but you need to make sure we have insurance is a big thing. What if the client was incapacitated for a while before they passed away and hadn't kept up on their premiums? So we could be in trouble there.
So preserving the property is just as important as taking control of it.
Yes. Yeah.
So Pete,
Yes.
when do you want to discuss horror stories?
When do we want to assess it? First of all, by the way, thank you, Don, for mentioning horror stories, because there's plenty of them. We're kind of like the cops on the beat who see the worst.
Yeah.
This is not a scare session. This is kind of realistically that you can go through some of these duties of a trustee so that you could sit down with whomever you have selected and talk to them about what they're getting into. But we have plenty of horror stories. Don, why don't you give one? And
so we have a question that's come in. So 3 siblings, mom dies later last year. Brother's the trustee, executor, was living with mom for a while, is still living in the house rent-free. There's no accounting, there's no control. He's basically got the keys to the whole thing. What can you do about it?
go to court.
Yeah. Yeah.
Who
Absolutely.
do I go to court with? So do I
Hire an estate planning. They have now estate planning litigators, and we can recommend some folks who are ethical and responsible, because it's going to cost you. It's like open heart surgery litigation when it comes to estate planning, and be prepared to spend about $100,000 in litigation. So it's ugly. And that's why choosing.
Does the estate pay that?
Huh?
Does the estate pay the attorney?
Yes. Yes.
Yeah.
Or you can, if there's a thing called surcharge. And so if a trustee is deemed to have breached one of these duties, the court can surcharge the trustee and make the payments come from that previous trustee. And that happens. Got a case right now where the daughter was totally in control of the trust and kept the rents. And now the judge told her she has to come up with 17 years worth of accounting, and she has to pay her brother all for the monies that has been lost. So yeah, this stuff is really serious. And but 80%, no matter how terrible the documents are, everything goes smoothly.
Right. Yeah.
Why
As you say,
is
it's not a
that?
scare tactic. It's the, oh
Yeah.
shucks, this didn't work. I mean, I remember one of the sessions I was doing with Pete, everybody raise their hand in terms of, have you been an executor? Yeah, how long? Pete was going through, a year, 2 years, and one guy said 29 years.
Yeah.
And they hadn't settled the estate because the
Yeah.
family couldn't agree on anything.
Yeah,
And it was
and
like,
that's the
those are the disasters you don't want. And
Yeah.
that's why you look at the rules and say what needs to be done and how to do it.
And that's why you
And
got to
so-
be honest with your family. Are you in that 20% that might have a problem? And so be realistic, because it could get very ugly. And it's not because of the court system, and it's not because of attorneys. It's literally because of the family. And they just don't like each other. And when they don't like each other, they use the monies that are in the estate to get back at one another. And so a lot of times when Richard and I step in, we're kind of like the neutral third party referee.
Yeah.
You go to your corner, you go to your corner, and we are diplomats. We are mediators. We try to settle it through the process, and so that each family member can move on their own.
And one comment that just came in from one of the questions was, incidentally, when we say, sue them, get a lawyer, do everything else, first thing I would do, and I agree completely with the questions, was just ask, how about if you say, let's have a family meeting and talk about it?
And that's
Because
why mediation.
as you just said, do you need a mediator? Do you need somebody outside to mediate that meeting? But on the other hand, have the discussion and try to resolve it there, because otherwise
And
it's
what
going to cost
happened-
everybody a lot.
Yeah. And what happens is it's the emotions. It's kind of like saying, hey, at 16, you didn't let me have that dress that I was going to wear to the prom, and you really hurt me. And now it's my time to get even.
Yeah.
So,
Yeah.
that's one of the problems. So, but here's the duty also is to preserve the property, which means that the trustee puts their title in the name of the trustee. We just had a situation where somebody else was trying to sell a property under a fake trustee document. So we had to go to court to quiet title. You can't put monies of an estate into your own bank account. You have to create a new bank account with a new taxpayer ID. So it's all about control and preserve. Keep that preserve word in mind. We're not there to grow the estate. It's not our property. We're there to make sure that it doesn't lose money. So what happens if, let's say we had $500,000 worth of Enron stock in the portfolio when you took over, Richard? What would you do?
We'd be in trouble. It'd be a tough thing to explain to the judge at the court, because obviously
if you kept that Enron stock.
Yeah, no, you would be, your asset allocation is improper. Your prudent man rules are not being obeyed.
Well, we're going to get to that, but we need to preserve. Owning stock is risky. It's growth. So let's go to the next slide.
All righty. We got the duty to keep trust property separate and identified. This statute requires a trustee to keep the trust property separate from the property not subject to trust. For example, a trustee should not commingle personal funds with trust funds. This is very important. This is going to tie back into your accounting, and right away when you are starting as a successor trustee, you are setting up that administrative account for the trust.
And every beneficiary is entitled to complete accounting when you started, and then and as to every penny that has come in and every penny that has been paid out.
Yeah, very important. You never.
How often is there a requirement for financial reporting?
Usually it's once a year, but you should be transparent throughout. And so if a beneficiary wants to have a bank account statement, you send them one. There's no secrets in doing a trusteeship or an executorship.
Yeah, yeah, exactly. And the more transparent you are, the more you alleviate any of those anxieties that the others are having, making sure that you're doing a good job. And very important. Sometimes I was just thinking too, Pete, that there's times when we might not have money right away. We are waiting for the death certificate or this or that. And your trustee may have to use
Their personal funds.
Yeah. But you want to keep track of that, keep your source document, keep your receipt, and you'll get reimbursed, but you need to show that as well.
Yeah.
To everyone. Okay, next one.
Yeah.
All right, duty to make trust property productive. This statute requires a trustee to make property productive. Monies must be wisely invested and diversified. I'm thinking of a case I have right now where I got brought in through the court. Brother and sister were named co-trustees, could not get along, and brother took care of mom, who reached, I think, 101 years old, and lived at the house with her. And now now she's passed away about a year or so now, or more than a year. We are calculating 20 months of rent for the brother because he's still been at the house rent free, and we need to sell the house. And he has no job, no money. So it's, once we have a property that's in trust and it's vacant, or someone's living there, we need to be charging rent. You can't have it someone living there rent free.
Yeah, it's same thing with my brother-in-law and his sister. Sister moved into the house.
Yeah.
And wasn't planning on paying any rent. And so that's a breach of duty. So, so one family member has to either convince the other family member to start paying rent or to move out, or then it becomes the trustee's duty to sue the family member because they're in breach if they don't make the asset productive. And a lot of times it's that house that's the big issue.
Yeah.
And, the other issue is that people confuse productive with taking major risk.
Yeah, that's exactly what I was thinking. On an asset allocation, your mom or your dad might have a more aggressive asset allocation, but when you start as successor trustee, you need to take a strong look at that. You don't want it to be a risky asset allocation, and you need to make moves to make it more conservative.
Because your first duty is to preserve.
Mm-hmm.
So if you have a large stock portfolio, one of the first things we do is to sell that portfolio. Reason why? Because that's not preserving, that's trying to make it continuing to grow. And we put it into a bank account that offers a small amount of interest, not much, but we are making it productive, but we're preserving that asset for the beneficiaries. And then if the beneficiaries want to repurchase that stock or that asset, they can, because now it's theirs. We're just in the middle. We're not the owners. And so we have to make sure that when you died and that your beneficiaries received that asset at the same level or the same dollar value.
Yeah, absolutely. You don't want to go in front of the judge and explain to him why you lost money in the asset allocation because you were too risky.
Yeah. Let's go to the next slide.
All right. Here we go.
And
we got
here's
the
this rule is for long-term trust. So over 2 years. So what is the Uniform Prudent Investor Act?
So there's the bullet points here: the duty to prudently administer, duty to establish risk and return expectations, duty to consider prevailing factors, duty to diversify, duty to incur only reasonable expenses, duty to prudently delegate, and duty to independently monitor the agent's activities. These duties are tying into all the other, duties that we've been talking about to preserve, to have, a little bit of a return on the asset allocation, but not to have the risk. And if you are not, kind of qualified to evaluate these things as a successor trustee, then you need to get someone in there that can do that and help explain it to you.
Yeah. We don't,
and
Richard and I do not manage funds for the long term.
Mhm.
We seek out fiduciary, independent, fee-only financial advisors. Why do we do that? Because we want the financial advisor to be sitting on the same fiduciary side of the table as we are. We want a diversified portfolio. We want appropriate asset allocation. We want to make sure that the cost, the spending that we need to do to take care of you has enough liquidity on an annual basis, but still has some growth. We want to make sure that the investments are inexpensive, that there's no commissions on those products. So we team up with fee-only fiduciaries to manage people's assets for the long term. And we recommend highly, if you have a family member as a trustee who's going to be a trustee for another family member, that you bring in a fee-only advisor to help them out, to make sure that you follow the Uniform Prudent Investor Act. It's huge.
Yeah, it's very important. And like Pete is saying, that these fee-only advisors, they have the most non-biased relationship with you. They're on your side, they're on your team, and they're keeping your expenses low. They're out there searching for investments that are low cost, and yes, there's no commissions, there's no sales. You're not getting swindled on anything. And so also, not only that as far as investments, but they're well versed in budgetary needs as well. So we can explain to them what the expenses are that we're counting on, and they can put that and crunch the numbers and run it for us. And we could put up a system where that we are transferring money from the investment account into the administrative account, because every dollar in and dollar out is going to be in that administrative account. So it's a really good relationship.
Let's go to the next slide.
All right. Duty to account to beneficiaries. This statute requires a trustee to provide beneficiaries with accountings. Accountings are detailed statements regarding the financial transactions of the trust. They are similar to bank account statements, in which a bank reports the beginning balance and the ending balance and all the transactions that occurred during the reporting period that account for the difference between the beginning balance and the ending balance. A trustee must keep careful records in order to comply with this requirement. This one's huge.
Yeah, this one's huge. Probably 60 to 70% of all lawsuits filed contain this breach, duty to the account. The trustee doesn't disclose the fee in their accounting, or doesn't show the income from a particular source, or doesn't show the expense for a particular item. And that non-disclosure is the breach.
Yeah, and it's a special format as well. We have a court style format that's adopted in the estate planning community and in the probate code itself, for official accountings to be reported a certain way. And in a small family setting that's outside of court, you might not need to do the accountings that same format, but you need to share it with everyone.
Yeah. The other thing too is that if a family member is a trustee and they believe that there might be some problems with another family member or with a spouse of another family member, they want to present the accounting to the beneficiaries to protect themselves.
Yeah.
Because once an accounting has been given, then the statute of limitations begin running. And if you don't do the accounting, there is no statute of limitations, and that continuing liability may be occurring. And
Yeah.
you want to end that fiduciary liability as soon as possible.
Yeah.
So what we normally do as a professional, we provide accountings, and then we also include what's called a release letter. We ask the beneficiaries to review the accounting. We recommend that they see their own attorney, and we ask them to state in the letter that they approve of the accounting of our fees as a release of our liability.
Yeah, absolutely. And you get that clock started. It's a 3-year statute of limitations on that. So once the accounting is distributed, then that starts the clock.
And again, if you have a family member, all the family member gets along, there's absolutely no problems. Nobody's going to complain. If you only have one child, there is usually no problems because they're not going to complain about themselves.
Yeah.
Okay. It's just when you have a multitude of kids, and the more kids you have, the probably you reflect society. And so there might be an issue. Let's go to this overall standard of care.
All righty. So we got standard of care. The trustee shall administer the trust with reasonable care, skill, and caution under the circumstances then prevailing that a prudent person acting in like capacity would use in the conduct of an enterprise of the like character, and with the aims to accomplish the purpose of the trust as determined by the trust instrument. In other words, you don't have to be an expert.
But you do have to be a prudent individual.
Mhm.
So it's, if you name an individual who's not prudent, they're not going to be judged on, let's say I'm going to use a kind of a crazy analogy, but if you name an artist that has never done a QuickBooks or an accounting of anything, numbers are completely foreign to them. They're not going to be based on a reasonable artist as a standard of care. They're going to be based on what would a reasonable, prudent person have done in similar circumstances. So, and not looking back either. They try to figure out as to at the time, were you being prudent with the knowledge that you knew? So
this makes me think of something too. I was getting a reimbursement from a beneficiary, and it was chicken scratch written on a spiral notebook. I was like, I could just imagine if that person was the trustee and they're trying to share with the rest of the family member, this is how the money was spent, and it's just some scribbles on a piece of paper.
Yeah. It's crazy what goes on. Let's go to the next one.
All right. Qualities that make a good trustee. You're looking for, do they have the time? A lot of times we'll see a child is 60 years old and they're at the height of their career, and the grandchildren are in college, and so they're hustling, making money, to keep the whole thing going. Desire, the other issue is a lot of times the trustor might think of this job as successor trustee as a job of honor, that you're giving them a gift to be the successor trustee. So you want to make sure they want to do it.
Well, the desire is really important because let's say you name one of the oldest child. That kind of seems to be the standard, and the oldest child knows more about the rest of the family than usually the parents do.
Uh-huh.
And they know that they may have a conflict with one of the other kids. And so it's really important to talk to them first and say, hey, do you really want to deal with your brother?
Yeah.
Or do you really want to deal with your sister? Sometimes it's just better to have a neutral third person in there and let them deal with the problem sibling. Proximity. Why is that so important?
Yeah, I like it because you got to be there. You got to get into the house and see what's going on there. You're searching for statements and documents in the house, especially if you're in the role of advanced healthcare directive agent. You want that proximity to be close as well. You got to speak to the doctors, and you really can't get the real feel for what's going on if you're not face to face with the doctor to hear the diagnosis and hear the chance of success and and have that discussion. It could still be done, from a further distance, but you're going to have to plan to come to town for a few visits. Absolutely.
Yeah. Another thing too is that most people think that the hey, I have a living trust. I don't have to have probate, so it's going to go. It's going to go 2 or 3 months, and boom, we'll have our money. No, it's 7 months to a year. And if you have some properties that are in Apple Valley or in another location that is difficult to sell, it's going to take longer. So, or if you have a business, sometimes it takes longer to dispose of the business and to do it in an orderly manner. So,
well, and you can't do anything for the first 4 months with your 120-day notice as well.
We'll talk a little bit about that 120-day notice. What is it?
So as soon as the second
I want to make sure we understand. We have about 15 minutes left, and we have a bunch of questions to cover. So let's not spend too much time on the 120 days.
Okay. So real quickly, it's a requirement where the second to die, so the surviving spouse passes away, all the legal heirs and the beneficiaries are going to receive a copy of the trust. They get to see who you really love the most, and which is kind of fun. But for that 120 days, the beneficiary has the right to object. And we have to wait till that it has expired before we can really make any moves, before we can sell the house or do anything.
So the 120-day notice goes to family members, immediate family members, everyone that's named in the trust document. And any one of those individuals can object to the trust document itself, to the selection of the trustee, or anything else having to do with the trust administration process. So organization is absolutely important.
Absolutely. Ability to delegate. You're going to have to work with other professionals, financial advisors, CPAs, realtors. You need to do that. Communication, we touched on before, very imperative.
Absolutely key.
On the same playing field. And transparent. I think transparent is is the biggest one. You want to
communicate at that transparency.
Yeah, I think those two. And with transparent comes your accounting.
Yeah.
Oh wow, we're at the.
Okay, let's go through some of the questions that we have, Don. Okay. Come on board.
Come on down.
Come on down.
Richard, I cheated. I looked to see how many more you had, so I knew what I was saying. I'm just going to go through these. They're out of order in terms of where they came in, but that's okay. Probate court. Do they tend to have mediators who can actually help with these discussions? My guess would be no, but since you're shaking your head,
they have what's called standard. God, I forgot.
You don't mediate with anybody, therefore you don't know how.
Yeah, they have a standard that a meeting prior to the court where they bring in an outside attorney and basically try to get the sides to mediate and to come to some sort of a conclusion. But
MSC.
The MSC.
Yeah.
Mandatory settlement conference.
Okay,
yeah.
Thank you.
And
we need to make sure that we do remind people you have to pay taxes and you have to file returns and estate tax returns, and these need to be done timely and are very important, which is all part of the organization and the structure.
Yeah, you have to do an income tax return for the person while they were alive, and then you have to file income tax returns for the period that you were the trustee.
Okay, so I have a living trust in California, but my successor trustees are out of state. Which rule of probate and everything else covers?
The trust document itself controls. So if it was stated and put together in the state of California, it would be the state of California probate code that rules. If it was done in another state, then that state would control, unless it states in the document of whatever state controls under what probate code. So each trust can choose any state as to what rules it would go by.
Yes, okay. So here's a series of items from one individual, so some of these together. So if I plan to have one of my daughters be the trustee, can I put a note in here that she needs to use expert help and specify who she should work with?
Well, you know, we get that question a lot.
Okay.
And the answer is no, we can't really assist because we're not attorneys. And we would be giving legal advice to your daughter as to what to do as far as being a fiduciary is concerned, because it's follow the probate code.
But
And
they
that's
could
legal
enlist a
advice.
lawyer if they wanted to.
So we hire attorneys
Okay.
as soon as we begin a trusteeship, and so should a layperson, a family member. They should hire. Just the 120-day notice requires certain font size in that letter. It requires
yeah.
specific language in that letter. And that's why for a layperson, they're going to spend more money for legal help, but it's necessary.
Okay. How do I find a particular, I'm sorry, let me read it. How do I go, where do I go to find out if a particular, if Pete, if you have any legal actions or complaints against you, where do I go? That was the State Bureau?
The Professional Fiduciary Bureau. That's similar to broker check on the financial side, or
Okay.
it's similar to the bar search for attorneys, or for CPAs, the consumer division within the state that they're practicing in. So definitely, if you're gonna, there's about 50 to 60 professional fiduciaries here in Orange County.
Okay.
And the professional fiduciary, PFAC, it's called Professional Fiduciary Association. Is that correct, Richard? I can't remember.
Yes, of California.
Yeah. Professional Fiduciary Association of California is the association here for professional fiduciaries, and there's listings of a number of people.
Okay. There's a question, and I accept the fact this is really more, before in the living trust section, it's not an administration one. How do I write a clause that says if anybody complains, they're out?
Well, they have no contest clause. We don't see them working a lot. What we suggest is to state in the trust instrument that if somebody complains that their estate will be reduced by, a certain amount.
Their portion of the estate.
Their portion of the estate. So that means that if they go out and hire an attorney, that they're taking a risk to get a lower amount. You're also, what you can do is that you can allow your successor trustee to appoint a successor trustee. So, that's a possibility, but it has to be stated in the document. You can also have a third party be what's called a trust protector.
Okay.
A CPA that's not a beneficiary, or a financial advisor that's not a beneficiary, that can hire and fire the trustee. If you know that there's going to be problems within a family, you can state that the trustee can only be held liable if they are grossly negligent, or if they have malice or bad faith. So that kind of protects we ask this sometimes if we know we're stepping into a family situation that is very contentious. And so we want that extra layer of proof before we take, they take us to court. So we are under tremendous liability, and that's sometimes why the cost is somewhat high for our services, because that liability is so high as a fiduciary standard.
And that may lead to be an answer to the question I'm about to ask. What's the minimum size I should have of my estate that I would want to hire a professional? And my guess is it depends on how many contentious family members you have.
Yeah, it's really, that's the issue. It's first of all, most people think that it's a position of honor. And if I name my oldest and it has to do with love, put a separate love letter together and explain that, you've chosen the one family member that has some of the characteristics that Richard was talking about. Richard, go back to that slide. That these are the qualities. So, hey, I've named my daughter because she has the time, she has the desire, she lives close by, she has some organizational ability, she knows how to delegate, she knows she's a good communicator, and she said she's going to be completely transparent. So that's the reason to choose one family member over another, not because you love them or it's an honor, and you need to kind of explain that.
What about co-trustees? There's a class.
Sometimes it works, but now you've got 4 hands on the wheel. In other words, let's go to the grocery store. Okay. If you got co-trustees, they have to drive to that grocery store exactly the same way. And that's what sometimes causes the problems. They're also liable for each other's actions, whether they know about it or not. And so, it works out sometimes, but the reason why a lot of people choose to be co-trustees because they don't want to hurt someone else's feelings. Okay. And that's not a good reason to appoint a trustee.
Okay. What happens if I have a fiduciary living here in California, but the beneficiary lives in Canada? My guess is it doesn't matter.
Doesn't matter. We have that situation. So long as the trustee here understands that there might be different rules in Canada to receive the monies. So yes. So the trustee needs to get a CPA that's involved, that understands Canadian law, and so that they can help them out as to how best to distribute to the Canadian beneficiary.
Okay, a couple of just quick questions sort of through it, and we're about out of time anyway. Several questions have come up of making sure that, well, what if my fiduciary dies? So successor trustees and whatnot needs to be always listed. How many would you recommend? 3?
I would recommend 3. Yes.
Okay. Have you ever been sued?
Yes.
And how much would you recommend that someone have insurance to be a professional?
There is.
I figured I'd say that for the last.
Yeah, the insurance basically covers legal fees. People think that the court system is about justice. Well, that's kind of the Disney goal, but in practical circumstances, it's just a way to settle a conflict. And the more money you have, the longer you can spread this process out. So it's an immense amount of liability if you think there's going to be problems, and you better have a good attorney on your side. And even with a good attorney, you hope that you have a good judge. So the liability is huge.
Very good. Okay. Those are all our questions. Richard, I thank you very much. Clearly a lot of information. And I want to emphasize what Pete said earlier. the vast majority of estates settle simply. Everybody gets together and decides, here's what we're going to do. As long as it follows the rules and everything else, notification, the 120 days, all those kinds of things. It's no issue at all.
Yeah.
It's when they go to heck on you. And if you think you're going to have issues because your family isn't very compatible, then plan ahead. And on other things we've done, like charitable giving and other things, if I do that, my children will kill you. Do remember one thing, you're already gone. They can't kill you again. They may hate you, but they can't kill you a second time. And
do a love letter to the
do
kids.
the love letter, give the note of why things are the way they are, and explain it, and note the fact that, no, I never gave Billy a loan.
And by the way, picking out a trustee after your dad is not the big issue. The big issue is we're living longer. And so incapacity is the big issue. And it's a huge business from board and cares to assisted livings, to attorneys, accountants. I mean, it's huge. And you need somebody there to help you, be an advocate for you, because being incapacitated means that you're depending on someone else's knowledge and wherewithal to guide you through until you die.
Right. Yeah. Yeah. This isn't just about death. This is before death, and incidentally, then you die. And so, yes, all of the other things are critically important.
Yeah. And that's why you need to interview whoever you're going to pick as a trustee and talk about that.
Yeah.
And discuss it with them. And it's one of the reasons why we don't think, not because they're competition, why corporations aren't good as trustees, because they just don't have that personal touch to doing the job.
Very good. Okay, I'm going to wrap this up. So this is It's Your Estate, week 7, executors and trustees. Richard, we thank you very much. You can now go answer that, whoever just called you on the other side of your head.
Thank you, Don. And thank you, Pete. Had a wonderful time. Thanks, guys.
Thank you, Richard. Thank you, Don.